The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Thanks for joining us. It's time for the Tuesday Trade of the Week webinar. Before we get going, let me know on the questions panel if you can hear me and see that slide. Thanks, Dave, Mike, Todd. All right, thanks, friends. So as usual, before the afternoon webinars, we ask a couple questions. And they're up on your screen right now is the first one. Do you currently have an active subscription with us? Yes or no? Just lets us know who's in the room. And while you're voting, I'll remind everyone that the audience is muted. Use the questions panel to ask us questions. If you do have a question that you'd like to see demonstrated, or perhaps a stock to look up, you should wait until the presenters are taking questions from the audience. That way they won't miss yours. All right. Otherwise, just feel free to type out a question in the questions panel at any time, and we'll try to help you out. So it looks like close to 65% already have an active subscription. Thanks for voting. And those of you that don't, keep in mind we do give out a discount code later on in the webinar, so stay tuned for that. So quick follow-up. If you're a subscriber, are you on standard trade ideas or premium trade ideas? If you're not familiar with the difference, premium is the version that gets you access to the AIs, the AI channels, the ability to auto trade using AI strategies through Brokerage Plus, the ability to open up to 20 charting windows at the same time and access the RBI, GBI advanced windows, and do back testing. So all that kind of good stuff is what's included in the premium package. So it looks like over 50% in the room today already have premium. And if you're on the standard side and you decide you want to get the premium features, just grab that code we give out later on. All right, so we're going to record the webinar and have the recording up later on tonight or tomorrow morning. You get an email reminder tomorrow. You can go to webinar with a link to the playlist. And as usual, your hosts are Steve Gomez and Andy Linloff today. So I'm going to start the recording and let these gents take over. Hey, Andy. Steve, how you doing?
All right. Hey, good. Thank you, Scott. What's up, Andy?
Hey, Steve. Hi, Scott. Hello, everybody.
Yes. Hello, everybody. Welcome to Trade of the Week. Another Tuesday has come and gone so quickly. So here we are. We'll let some people file in as we get through the usual protocol. Just a disclaimer, the reminder that Andy and I have been trading our own accounts for a really long time. We still do, and we're also employees of Trade Ideas, and Trade Ideas is a software as a subscription service. So really nothing about this arrangement should be construed as official financial advice. We couldn't give it if we wanted to because we're not licensed. So there you go. All right. Tremendous growth for many reasons. I think we'll talk about a few of them today. But that means more and more people are coming to us. And Andy and I have been using this product long enough to know that it takes a good week minimum, maybe 2 weeks, to start to tailor and make it fit the way you want it to work for you. There's a lot of different directions you can go. And some people literally, I'm not lying, they literally sign up and they log in and their eyes gloss over and they ask for a refund because they're intimidated. And we get that and we understand that. And it's a very powerful product, and it can be intimidating, but we want to try and make the learning curve as short as possible and less intimidating as possible. And so we have Barry's live trading room, and we encourage questions and answers, and he's very generous with his time. He often tells support people, send them in. I will demonstrate exactly their question and show them visually. And then we have the afternoon sessions where we give Barry kind of a break and live stream either myself, I did it today, and the rest of us will pick up a slot during the week and go over whatever you guys want to go over. This webinar tonight is going to be much more pre-calculated content that we know we want to talk about, but these afternoon sessions, every 24 hours, you can pull up a chair and start asking questions, and we can share links. You can share us your link. We can help you work on it, do the best we can to get you going in the right direction, because again, we understand it's a very powerful program and it can be intimidating to some people. So take advantage of these points of contact that we make available for you guys. We'll also do our best to try and answer the questions in this webinar, but sometimes we can't get to them all. A reminder that link down there at the bottom between 12 and 1 Eastern is trade-ideas.com/live. That's the redirect link that takes you to the live YouTube stream. And once you're in there a couple times, YouTube will remember you and it will keep serving you up when you click on your YouTube dashboard. All right. So the theme, as usual, is human beings and technology. It's a symbiotic relationship. We both need each other. It's too hard. Andy and I tried trading before Trade Ideas. It was different. I'm going to talk about that in a minute, actually. But boy, once Trade Ideas came along and helped us hone in and visually focus on what we wanted to focus on, it was a game changer. But at the same time, you hear us talk about the AI, and the AI is interesting and finding real-time triggers and setups that statistically are probable. but the AI is not really a great manager of a portfolio or management of positions as data and things change in real time. The nuances of the trader, the human being, is much better in that respect. So we work very well together. That's just always been the theme here. All right. The agenda today. I'm going to talk about the market recap, some interesting things. I'm going to focus on what happened yesterday because that was really the point of interest. If you weren't with me in Jamie's webinar, it's going to be kind of the same thing. AI recap. I don't know what it is about Tuesday, turnaround Tuesday. Maybe it's turd Tuesday or whatever. But the AI just never really seems to have a good Tuesday. I don't know what the deal is. I had a great yesterday, had a great Friday, but we'll pull whatever ideas and whatever lessons we can out of that. The trade of the week last week did not fire. DGLY, we'll talk about that. The trade of the week this week did fire and had some interesting gyrations to it. We'll talk about that as well. So I want to talk also about the A table, some modifications that can be made, and show you guys a few. It's just a good lesson in how. What is this thing? There we go. A good lesson in how you can use trade ideas to really hone in and modify. It's not always just super cut and dry, but I'll elaborate on that in a minute. To start with, I'm going to take off the post market, and we'll talk about the S&P 500 again today. Gave a little bit back, especially at the close, but nothing really to speak of. The real interesting thing was what happened yesterday. There was just a little mini flash crash, we'll call those. And just real quickly, I kind of yearn for the days sometimes back in the day when Andy and I first started trading. You were sitting in a terminal and your counterparty that you were trading with, selling and buying from, to, et cetera, was another human being sitting at a terminal pushing buttons. And that was a lot more interesting to trade back then. It was easier for one thing, but it made for a different type of trading. But now we have the matrix, and we have this sea of algorithms and quant funds that run everything out there in the world, specifically Citadel. They're probably the biggest market share of all. And for all you who are happy that you have free commissions now, there's nothing free ever. The freedom is that you don't have to pay anymore, but what they're doing is they're sending your orders, especially the ones that you sit, like good till canceled stop orders. That's their favorite. Those are very valuable. Citadel has made billions of dollars off of Robinhood and E-Trade and everybody sending your order flow to them. It's the most extremely valuable information, and it goes into the matrix. God knows they probably even have a quantum computer running this stuff at this time. And it just makes for a whole different way of price action and the way things move out there. And what happened yesterday was a little reminder to us all that at any moment in time, there's some fear out there. We've been kind of riding the razor's edge here for a while, and once there's panic that sets in, it can get nasty really quick. You guys, newer people, probably haven't seen any markets like that. Andy and I have seen them, and they're not fun. And when you have a flash crash, good luck, logging in and actually getting a quote and getting your order to be sent. Because I'll tell you what, everything freezes. It's no fun. And so I don't ever want to be in another one of those. We were in one of those back in May. But the reason I'm getting after this is, let's look at GameStop, shall we? Let's look at GameStop. For those that you don't realize, some of you have, some of you have not. GameStop has been an unbelievable anomaly. And I thought we saw the worst of it yesterday. I thought, wow, that was impressive. But boy, was I wrong, because today we are now up at $234. This is just going insane. I'm probably going to write about this one for days to come. But this is what people are focused on right now. And yesterday, we had this little move upward, and I kind of thought that was the last of it, and then a big crash. But what I want to get at yesterday is to just quickly kind of show you in this market recap that it's not just human beings trading. It is a matrix of machines, and we're just slave to it. And what happened yesterday, I'm going to take these post markets back off. What happened yesterday, I'm going to use Bed Bath & Beyond for a better example. Okay. Let's count these candles. We opened up 15-minute candles, 1, 2, 3, 4, 5. And then on the 6th candle, we had things that were losing 10% in 2 or 3 minutes across the board. And when the algorithms that run these markets see stuff like that, they react immediately. Not only do they react, they overreact. in a very vicious fashion. I mean, everything gets locked up and it's not fun again. So that is what kind of happened yesterday. We had stocks across the board. And think about it. Everybody was talking about GameStop going into the weekend, how this Wall Street Bets, I think is the name of the Reddit group, that has discovered that stocks only go up when we have a giant short float, and they're literally squeezing the hell out of some of these hedge funds, and it's a very interesting battle to watch. But how does this all tie together? And I'll tie it together when Andy comes back from talking about the AI, is that what have we been talking about here for the last couple months, probably in the trade of the week? We've been focusing on the A table scan. And what does the A table scan look for? It looks for short float. So essentially, everything that went into the weekend at the top of my A-table scan went absolutely bonkers yesterday. We'll talk about that. But again, right now, we're just talking about the general market. I wanted to just backtrack a little bit yesterday and show you what really happened and why it was that sixth candle in the Qs and the spiders that just algorithms went crazy, and they get these negative feedback loops. That was a minor one. We'll call that like a 4.0 on the Richter scale. It's not going to be fun if you are fully leveraged and you got a lot of positions, and we have a 7.7 earthquake on the Richter scale of a flash crash magnitude. So that's what's going on in the market. Technically speaking, there's really nothing, again, to throw a bear case at. And I'm going to add to this. Andy reminded me tomorrow we have earnings in what? A giant monolith known as Tesla, which you just can't stop. And if I was to look at the chart pattern, we talked about this pattern all day last week. These flags typically want to continue the direction they're going. So we got one more day tomorrow before earnings. Doesn't look like Tesla's expecting any bad earnings. We'll see. But I think the market is waiting for that. There's nothing that can bring this market down, not a mini flash crash midday or anything. And I didn't really prepare to talk about this, but my God, this short squeeze stuff is absolutely crazy right now. And I think one of our newer people, Chris McKay, said it best, don't necessarily understand it, but I see it, and this is what we have to work with. So let's maybe try and figure out a way to work with it. So that's all I've got. There's no real bear case, as I said, usually say to make. But when we come back from Andy talking about the AI today, we're going to dive into the A table a little bit and kind of take this a step further and look at how we can maybe modify it. And I know I'm freezing up over here.
Okay.
Start talking, I just keep hitting it, ding, 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 and when it unfreezes, there it is. So if you want to take it over, Andy, and talk about the AI.
All right, I can do that. Not a lot to talk about. Once again, it's the old, Tuesday jinx, if you will. Yesterday was a great day for the AI, but today, all in all, the totals, if you look at the totals, they weren't that bad, but that's only because of one trade, this parts. Spies, I always like to look at what it had to work with. Okay, we had another gap up this morning in the spies, and really we did not go anywhere. We finished lower than the close. So anytime you get action like this, guys, heading into the teeth of earnings season, I think is why you're seeing a lot of action like this, waiting for the big boys to come out. It makes it tough on any algorithm, any method that you might be trying to use intraday. Was no different for Holly today. But what I would like to talk about today is how most people, the people that I've seen successfully trade Holly, what they will look for, they treat it as a very good, alert window. And I'm going to show you. All we have to do is look at the top three on the board here, and you're going to see something in common in them all. Let's just go with this big winner here, this PRTS. Now, what's not there to like about that? Beautiful trade there. This is one where there should not be any doubt in your mind. Look at the buy signal right here. Let's marry this up with the all-time high over here. And we'll just put it right there. Holly actually pegged it before it broke out of this wick. So look at the volume, relative volume. I'm sorry, I didn't pull my Epic Pim up. It's over here in my single stock window. I'm looking right here. It's over 15 relative volume. And I'm not sure the earnings is not till March. So I'm sure there's some news behind this. I didn't look at it, but nonetheless, I don't need to look at it because I see a major breakout on huge volume. I don't care what the news is. I'm going to trade something like that. That one to me is what I call a no-brainer. And let's look at the next one here. And same thing. What do you see? Position and lifetime range, all green. Okay. There is no resistance. And you had a nice little range break right there. Some nice momentum, almost getting to the target intraday, pulled back all the way to the entry. And then went back and finally, I'm sorry, it did get that target. There's the target price right there earlier. So, but anyway, I want to focus in on what we're seeing over here on the daily, this one. Now, this one, not quite the same, but still a nice 2-month breakout right there and a nice, wedge. I don't need to draw it for you, but it broke out of that wedge yesterday and a little continuation. This was bought on support call, pulling back. Nice little contrarian play there. Nowhere near the stop on the pullback, only went a few cents below. And then finally, at the end of the day, had a nice little move higher. But once again, focusing on the daily. Now, if I do go back here, you are going to see some, congestion over here, but still a nice little 2-month high there, breaking out on a little bit of volume, to relative volume. So when you see something like that compared to some of these ones you might see down here with stocks in no man's land, and you may be asking, well, why did Holly call that? Well, Holly she back tested. She has no idea what she's going to call. These are all back tested strategies. Okay. So statistically, they are working the night before in the optimization back testing and all that. So, but this is where you come in play. And when you see something like that, you may say, oh, a buy here. Look at all these moving averages. I'm going to leave that one alone, and I know what Holly was looking at. Gap up and pull back. And looked like it could possibly reverse, but it didn't. Okay. It did go sideways for a while, gave you a little bit of profitability there, but for the most part, just could not get anything going. And there's a lot I can go through. There's a lot, obviously, that did not work. But guys, I could go through these and we could look at each one and I can give you a reason why I would pass on something like this versus why I would definitely take something like this. And this is where Steve was talking about in the intro slides. Man and machine. Machine is dishing you out some ideas. It's up to the man to decide, hey, do I like that idea? What are my risk reward in this idea? So just keep that in the back of your mind. I'm not going to dissect. There was a lot of trades today. I have not seen this many trades in a long time, so I'm not sure what was going on, but really too many for my liking. But normally, we'll see between, I'd say average around 15. But Steve, that's about it for me. I'm going to shoot it back to you. Just not a...
All right. Yeah, I know. I hear you. It's the Tuesday curse. Tuesday jinx.
Tuesday curse, yeah.
All right. Before we talk about the A table, the trade of the week last week was DGLY, and it was one of those didn't triggers. Let's go back in the time machine a little bit. Again, this is what it looked like going into the weekend when the trade was called. The blue line would have been the trigger, and the beautiful cupping, bird in the hand, whatever you want to call it, just resting, waiting for a reason to break out using that 10 SMA as a floor, totally changed. Well, actually, it changed the next day, but it was still in play. It was like, okay, well, it tried to break it down, but then sucked right back up. It's back in play. Still has a shot here, okay? But once I see this, it's over. I don't just take it off my screen. I don't want to see it anymore. You have what I say, closing price. It's a complete breakdown. And from this day, there's really not been much recovery again. So we're kind of fortunate that this didn't trigger. And that's why we have an upside trigger sometimes, just to make sure we don't say just jump in and buy it. We'd like to at least make sure we get a little bit of confirmation. And so then here was last few days, once it breaks down here, it just gets caught in the web of these moving averages now acting as a suppressor rather than a supporter. And there's the final close today. Disappointing candle, and made an attempt to push higher. If it had closed back above that moving average, it would have been interesting. But no, I'm just not interested in that. So that was last week, and that was a no trigger. This week, we had a lot to choose from. I'll just kind of remind you, sometimes when we do this, we when there's a few extra ones I can't really pass up, we will put secondary ideas on there. And let's just look at those real quick. NRG was the first one. Breakout, fake out yesterday, like a lot of things, and kind of pulled back on that one. NLS, this one was the one I was very close to calling Nautilus, very much like Dick's Sporting Goods kind of stuff. Just a beautiful, there it is right there, nice wedge. And then, broke out of that. RVP was another one that I thought was interesting. Let's go back 2 days on that. And it looks just like that. Very hard to pass up something like that. Never heard of them. Retractable, surgical, medical. But that was a beauty. And look at that thing go. Should have called that one, right? 2 more that were on the short list of given to you. NK looked like that. That's the kind of stuff we've been talking about the last 2 weeks. Beautiful sideways congestion right into a moving average. And then boom. All right, not bad. Last one was Andy's pick. Momo. Look at how pretty that was going into the weekend. So, I mean, hopefully you guys read the entire print, because sometimes I will put some also ran secondary calls in there. And as we go through these, it looks like they're actually, how about that, working better than the one that actually got called. But I think we're not going to give up on our friend Solo here. This is, of course, one of the electric vehicle makers that are out there. And it's just been kind of taking its sweet time. Now, yesterday was absolutely no fun whatsoever. It got completely caught up. I mean, right about the time I was ready to say, hey, it looks like we had another one that worked here. You know, got up to that level. What was that? The 6th candle? 1, 2, 3, 4, 5. And there's the 6th candle that just ripped it back down. And the algorithms, of course, overshot everything, ran the stops. Everybody that probably bought the stock and said, I'll put a good till canceled stop right down here. And the Citadel algorithms just hung you upside down, shook the change out of your pants, and took your shares. Well, oftentimes when that happens, it's usually going to continue to move higher. This stock is, this trade is still intact. Again, a reminder on the downside risk, downside management of this trade. Why won't that come up? Oh, because I moved it over here. That's why. We don't want to see the closing price fall under the rising 20-day moving average. Well, it didn't. It didn't even touch it. It didn't even close below that. It bounced right back up into play yesterday. I kind of call that like the Kareem Abdul-Jabbar, where he just grabs the rebound and just starts throwing elbows, you know, indiscriminately, because that's literally what happened yesterday. It's not fair, but it's the market we have, and it's the market we have to play. So the trade is still intact. Honestly, I hope to see some good things from it tomorrow. We've been very patient with it. As long as, you know, Tesla's earnings aren't until after the close tomorrow. There could be some euphoria in electric vehicle land going into the close tomorrow. I'm hoping and expecting some good things. So other than that, the trade, there's nothing really to worry about. It's just one of those things that you just look at it, see how it closed. Well, it looked like it closed pretty strong, both on the intraday and on the daily. Got to sit with it. All right, so let's play with the A table. I'm going to start off by saying, Andy, and you agree, I've never seen this many names in the A table, right? I mean, there are times when the market was collapsing. Wow. Yeah. Wow. He knows. It's a lot. And let me just divert here a second. Again, there's a little trader axiom in the back of my mind that reminds us that markets can have 2 types of capitulation, and you can have downside fear capitulation, which is what we saw back in February. All right, when we right there, downside capitulation, boom. The markets can also have upside euphoric capitulation, and when we zoom out this much, I mean, we're kind of living on borrowed time until something happens. But when I start to see these crazy moves in GameStop and Bed Bath & Beyond and these upside wicks running, I feel like we're entering some underpinnings of the FOMO, the fear of missing out, upside capitulation, where you're seeing screenshots of people on Robinhood. They just couldn't take it anymore, and they wound up buying, you know, these incredible highs and got reversed on, but maybe they're back in the money again. But it is a caution flag, and I did want to kind of bring that up, that I'm a little concerned about that, because as you see, we zoom out again, it's been quite a run. I just want to remind people that capitulation can occur on the upside as well as the downside. The fear of missing out can sometimes be pretty damn strong too. I'm glad I saw that, Robert. What is the A table? The A table is a wonderful scan that essentially takes 2 filters. One is the score composite rating, which means It's a combination of 8, 9, or 10 technical filters, strength or weakness, and a few fundamentals. So think of it like a grading curve in college. The 80 and above are your B students, 90 and above are your A students. So I'm looking at the A and the B students according to our stock composite rating. It's a very simple way to just say, show me healthy charts without going in and defining what healthy is. We've already defined what is healthy for you. Then we add the secret sauce, which is what everybody's talking about now, right? Short float. How many shares are being held by these shorties, these hedge funds, these short guys? And if they have to get out in pain and cover, they've got to buy to get out. And that creates a squeeze and a perfect storm where everybody's rushing to buy at the same time. And that's exactly what we're experiencing right now, literally across the board. So wouldn't you know, my little A table that we've been talking about and I've been using for Trade of the Week, a well to go to, is all of a sudden literally almost the holy grail. It's what everybody wants. So we're going to look at this in a couple of different ways. I mean, yeah, look at that. There's Gamestop at the top because I'm sorting by short float. The darker the color, the higher the short the float. So pretty much anything on this chart is in play, but do you dare want to play the game of musical chairs right now? I mean, when the music stops, is there going to be a chair to jump in? We saw on Monday after the 6th candle how deadly that was. But I'm going to go a few different directions here. As you see, there's a lot on here. And I'm going to tell you what, there's 100 on there, because if we go to time frame and set record count, they're always defaulted to 100. I could change that to 500 and I could bring a lot more in. Now I'm going to have even more, but is more better? Is that really what I want? I'm going to explore some ways here to show you guys how we can use just some simple filter sets to really kind of take some different perspectives on what we want to see in a couple different ways. The first thing I wanted to talk about, and this is what kind of started this whole content idea, was let's go to let me do this. It was actually on the it'll still be on there, doesn't matter. Time frame. This is what it looked like going into Friday. This is all the stocks that were in play at the end of the day on Friday. All right. Still a ton of names. And, if somebody was really on their game, and I would love to hear that somebody was on their game, could have been using this scan going into the weekend with all the talk about GameStop and short float and things like that. Come on, don't seize up on me. There we go. All right. So this was on Friday. Now, what's not on here is or was solo. And I can verify that by I could even double click and alphabetically sort S. Okay, so it wasn't on there. So I'm going through the genesis of how I found solo. I was going through the A table and a lot of things had already moved. They weren't looking like the consolidation stuff that we liked. We were talking about last week and the week before. So here's where we go. I'm going to say, well, wait a minute. Maybe I'm just selling myself a little short here. What if I go to configure? And what if I say, well, maybe I'll take the C plus students. Maybe I'm leaving them out. What if I go 75 to 79? That's going to give me a small window of things maybe I hadn't seen. So this is the first thing I want you guys to take away, is that you can do something like that. And when you do something like that, there it is. Solo all of a sudden popped out to me because it hadn't. That was that one filter that was catching it. Now, again, we've got so many things coming through. It was kind of worth it this time to just kind of see, and I couldn't believe how many names were just in a simple 4-digit, stock composite rating. So that's the first thing I want to take away. If you want to use this, you can do that. You can lower your threshold a little bit right now, and you can bring some more names in. But again, it's not about having all those names. It's about having quality. So we're going to look at a couple other things we could do here. Let me go back. Go back to real time. Like always. And we'll change this back to what we had before. 80 is the minimum. All right. So there's a lot of names on here. Now, what if I said, okay, so these are short squeezes. What if I only want to see the short squeezes that are going to all-time highs? How would I see those? Well, there's a few of them in there, but the best way is to take a filter that we call position and range. and we'll go position in lifetime range. We'll add that filter. Now remember, 0 is the lifetime low and 100 is the lifetime high. So what if we're seeing things that are right at the 98th percentile, or higher? We click OK, click OK. Oh, look at this. All of a sudden, we've got the rocket ships. So what I'm trying to drive home here is how to use filters to maybe really drive home and filter down into a smaller subset of what we want to see. Now, maybe you don't want to be chasing all of these, and I wouldn't blame you. As you see, a lot of these have really, really gone there. FUV, that was the trade of the week 2 weeks ago. Still having fun on there. So that's one way that you could probably pare down all of the returns that you're getting. Yes, you could do relative volume, Ron. You could do RSI. Those are some things. But here, or let's just do one more thing. Let's say, a lot of times the position and lifetime range can be valuable, but also position in like a new 52-week range, position in 1 year range. And so if we do that, add that filter, turn off the lifetime range and say, all right, show us things that are above their 52-week range. We could do it with a value of 100. And that would give us a set of just these. These all happen to be they just took out their 52-week range. FUV, there's our friend FUV. Before I get to a couple questions, I see some good ones. Here's one more. Now, one of the things I'm seeing here, and you guys heard me say, I don't want to chase that. I don't want to chase that. I don't want to chase that. So, oh, well, that would have been nice to know if I could have seen that before. So let's consider this. We're going to call it 5-day range. 5-day range expressed in percentile. This means that we can have the filter as a maximum value cap the range, so where we don't see things that have just already shot. We have all the other parameters in place, the good score, the high short float, which gives us a lot of potential energy. But let's add this filter. Let's turn off that one and say, all right, well, now we want to see everything else with the stock composite rating of 80, the strong ones with short float. Shoot, we could even, up that short float. That's another thing we could do. Just say there's so many. Let's just focus on the ones at 20 and above. Or maybe 15, make sure we get some good ones. But here's what we could do. We could say, well, let's start with 10% max. It's still a big move. Maybe we could even play with that. But if we do a max 10%, what would that give us? All right, now I'm going to look at these. Now I want you guys to remember something. It's not including today's candle. So when we look at these, do not include today's candle. Consider what it looked like yesterday. This is what, until tonight's overnight process goes, it's not including today's candle. So what I'm saying is the filter we just created, maximum 5-day range, cannot exceed 10%, but still has to have high short float, high score. We're trying to find things that might be compressed. We're trying to find things that might look like that, So coming into today, that would have been nice to know. So using this filter might have been interesting. Let's take a look at that one. Well, that would have given us a look like that before today. Another compressed range. That would have been nice to see coming into today. So that's another way in which you can really narrow down this giant palette that we've got. And if we just turn that off again, we just go back to an insane amount of ideas. What were we doing there? We were doing the 5-day range. I don't know, Andy, anything you want to add to this? Am I rambling? Is it making sense?
No, it's definitely making sense, for sure.
It's just a lot of stuff to look at. When I turn that filter off, you're back to this. Geez.
Well, no, I'm glad you're doing it because it shows people the way you can take these filters and manipulate and to see basically what you want to see. And the position and range is very powerful. I use that in so many of my alerts, and I'm glad you're kind of going over that.
Yeah, position and range, or even that range expansion, contraction, putting a lid on that certainly helps. I feel like I've lost a couple questions, so let's backtrack. Yes, the A table, of course. I will give you guys the raw version of it, and you guys can play around with it based on what you want to do. I'm going to put this in the chat window so everybody has access to it. I got to spell it right though. And then that looks like the one cloud. Yep. All right. So for whoever wants it, that is in the chat window. And again, I can't stress enough. I'm a little concerned about the upside euphoria we're seeing in this market right now. It's in the back of my mind. It's making me not be extremely aggressive and take a lot of risk.
Sure.
I know Andy's the same way because we talk throughout the day.
Yep.
All right. What about, we talked about that. Any suggestions? Okay. So, okay. Good question from David. Do you both always take the trade of the week if it triggers? And then do you stay in them as long as they continue to look good? It always just depends. There's about three different accounts that I've got my finger on, and usually the trade of the week will be in at least two of them or one of them. I try to stay into them, and the best, simplest way to manage is if you get your big move and you're happy, I like to take off half and then let the other half work. And I will honestly tell you, am I still in half of FUV? Nope, I'm not. It's just too hard sometimes to stay in these things. But, that was a nice one. I think if I recall correctly, we were talking about FOV last week looking just like this. Oops. Saying, oh boy, this FUV looks like it's ready to go again. And then, boy, did it ever. Let's see. If I looked at the A table now, would it show the close of? Yes, it'll. Everything in the A table will show the close of today's candle.
You might show him that feature that you use as far as your time frame goes to let him know that everything freezes. Okay, he does live always. I do live during market hours, so it will freeze at at the close. But this will continue to show you.
Right. I like live always because I like to kind of see what's going on after market sometimes. But I don't like marking my charts up with after hours.
No.
All right, make good sense. All right, so let's move into the next segment, guys, before maybe 5 minutes away from letting Scott have some announcements. We can look at whatever charts you guys want to look at, and let you know, the good, the bad, the ugly, the honest truth, the unbiased truth. If you guys want to do that, and I'm trying to answer some other questions as well. Let's see. So somebody had started earlier with, can you look at ATOS? ATOS. It's not part of the short float game. It's under $5. I mean, it's definitely coming to life. It's not my bag of stuff that I like to play, but what I do see is, I like to see this act as support, and the higher and farther it gets away from that moving average, the more likely it is to always come back and test it at some point. But it looks like it's liking something, not bad. Okay. That was a good question from Sal. Instead of a 5-day range, how would you set up a 1 hour range? Same thing. Let's go right to that configure. It's a good question. So type in the keyword, go to the search tab under configure and type in keyword range. Spell it right, of course. And you asked about, what was it, a 1 hour? So 60-minute range. There it is. So this is what you're going to want, percent. If you play small stocks, you can use the dollar amount, but you could say, I want to see a tight range, maybe put a 1% in there, or maybe 0.8, but start at 1% on the max and see if you can find tight ranges throughout the day. I know what you're thinking. I see you working there, and that's how I would approach that. Oh no, I see somebody talking about a stock that I got out of and I'm going to kill myself for. And there it is, after FUBO. I don't get the trade of the week. How do I get my email added? Sai, maybe Andy can drop that link into you. Sai, Praveen doesn't have the trade of the week link to get the actual alert. We're looking at FUBO, FUBO. Looks very good. This is, right. Okay, I know them. Yeah. Yeah, looks really good. It's had 4 or 5 days of good movement. At any moment, it could start to consolidate on you. I would keep an eye on nice intraday movement above the 10 period. Just take profits when you can. And this is the one that's going to hurt because I got out of this one yesterday during that stupid flash crash. I'm really angry. See, this is how the stock gods can mock you sometimes. I just said, I'm going to lighten a few things up that I don't have a lot of conviction on, and this was one of them. I got out yesterday, and then
it happens
today. When I saw this today, I was so
That happened
happy.
to me too. And a couple. That's okay.
Yeah.
If that market would have kept going.
We can sit here and tell you guys we caught everything that's out there and we're the world's greatest traders, but that's no fun. I mean, it's more fun to just be honest and laugh about, stock gods and
they get you sometimes.
Yeah. All right. Continuing on. You guys got some good ones coming through. We'll go ahead and halt those because we got enough questions to finish us out here. FCell. Yeah. Another interesting name. Very nice movement coming off of today. And also Plug. God, I saw Plug. I even thought about, look at these. They look very similar. It's everything I was talking about last week for you guys that were here last week. Just the perfect sideways action right into the hand that guides it higher. FCell looks great. Maybe you get some nice follow through tomorrow, and it's never bad to take some profits. TRIT, what is happening? Looks like it's in a downtrend, and these moving averages have a hold of it, and it doesn't want to go higher. It also looks like a new issue because the 50-day moving average is just starting to draw. This one is under pressure until I can get back above those moving averages. Is it BBI or BIB? Just kind of grinding higher on BIB. Nothing to say bad about there. You also asked about TTM. This one is a ADR, obviously. It's got to be. Yeah, Tata, Indian. So all the gaps. I don't like trading ADRs because they're very gappy. You just got to be on the right side of the way it opens the next day. But in the bigger picture, nothing wrong with that. It should bounce right there. If it doesn't, then you want to get out. Zynga, I think we talked about that one. Yeah, really, it broke out of that nice wedge, that long trading range we talked about last week. And now it's getting a little squirrely up here. You could call that consolidation, I suppose. Amazon. Well, it's surge up. It's treading water. What does Amazon look like? It's healthy. It's broke back out of this smaller range, but obviously the bigger range is going to be right there. So, I would say the bigger picture in Amazon is, can it close above? It'll probably have another earnings. When's earnings? February 2nd. How about that? It's only 10 days away from crushing earnings and crushing all the small business and mom and pops out there and probably gapping higher. AITX. Oh, did I just freeze? Hold on, guys, while my system unfreezes here. Okay, AITX, or was that correct? Yes. Wow, that's an interesting one. Certainly came to life, and it's under 20 cents. I don't really have much to say about those. That's a tough one, but take your profits when you can. Oh, yeah, let's see. CEMI. I see somebody talking about UAVS. That's going to be fun. That one really got ahead of itself today. I'm not a fan of the way that thing trades. That's pretty nasty. The link for the, yes, Robert, or maybe if Andy was handing out that link to somebody else, you could drop it in the chat window for somebody else. They were asking about that, Andy.
I just dropped it in there.
Okay, EQOS. What do I think about that one? Well, nice wedge, but it's kind of floundering under its moving averages. I would like to have, that one's suspect. That needs to shape up quickly, and this is the one that's going to hurt. Speaking of getting out of things too early, I was a wonderful trader here, and then I got out here, and then I just watched the rest of it. Even though UAVS was a trade of the week, it's a good one to revisit, you guys, because we talked about this on the open. All right, UAVS was the trade of the week. Boy, did it look good. Gave us 2 days of closure below the 10-day moving average, and then it came to life. And then it hasn't really looked back. It's actually setting up again. If somebody wants to take a chance and you really love it, I don't know if I'm going to love it, but that could be an interesting entry if it digs in here and holds that 10-period moving average around 1150. All right, a few more, then we'll bring in Scott. Do you think snow is taking off? No, it looks under pressure, quite honestly. It's being held down by the 10 and the 20-period moving average there. How can you filter for pre-market? And if it's, you're going to have to go to the channel, and you can see the post-market channel. There's an event called post-market high and an event called pre-market high. because the regular new high and new low won't work in post market. Somebody's talking about pets. Oh, that one had a big reversal. I'm not sure what's going on there. It must have been, I don't know. Interesting. But I don't know if I would chase that now. ADT, very good day today. I would expect it to have a little follow through tomorrow. What is that? ADT security, right? All right, we'll do one more. And then
go over Bongo for sure.
I was just going to go over Bingo, yeah.
Okay.
Saw another one too. I'm going to talk about. Boy, very gappy. This thing just really likes to gap, doesn't it? It's a U.S. stock, interestingly enough, so it doesn't have the ADR curse.
It is gappy. Yeah.
All right, the last one that nobody's asked about, but I'm going to talk about it because I keep seeing it. Was Boxlight Education. Yep, that one looked really interesting. I wish I'd kind of seen that yesterday. Not one to chase today, but just wanted to show you that was a really good looking setup, especially when they pull back and they wash down with a big wick and they come back up and close right at the 10-day moving average. That's money. I like those. Anyway, all right. I guess that's it. Let's bring in Scott for some final announcements. Thanks for the participation. Info@trade-ideas. If I missed any of your questions and you want to address it to me, we can hook up there at info@trade-ideas. But for now, let's bring in Scott and the remainder of the slides.
Yeah, just a couple announcements on the way out. We do have an earnings season book. Get that before we switch to a different one. TradeIdeas.com/earnings, the best place to go to get it. And you can grab some cloud links from the PDF that you'll download to import into your layouts to apply the same lessons you learn. We also got a podcast, just released one last week. Trade Ideas Podcast is what you search for in your favorite app. Hit subscribe, download the newest one, check out the archives. We got some good interviews from last year, and we'll be releasing more. Holly New Year is the code that's good for the rest of this month. So it's just about a week. We'll leave it until next trade of the week webinar, but you got about a week to use it. Let's say it's 15% off your first month or year of any Trade Ideas subscription or upgrade. So go ahead and grab that. Today Trader is Steve's handle on Twitter. Also follow us at Trade Ideas. Facebook.com/TradeIdeasPro is the Facebook handle. And send all your questions to info@trade-ideas.com. Goes into the help desk. Like Steve said, we'll get you a good response. The recording will be up later on tonight or tomorrow. So stay tuned for an email tomorrow with a link to the playlist. Thanks, Andy and Steve. Have a good one. Thanks all.
See you next time.
Thanks, everybody. I'll see you on Thursday. Bye-bye.